Hey folks, time for another update for my SPY options challenge. It was a pretty interesting week. I made over $1,100, which is the most since I started this challenge. That represents a 3.9% return on my initial investment of $30,000. So in total, I am up now 9%. And as usual, I will be explaining what I did over the course of this week and then go over some trades specifically for Friday, which is today. And while I had a great week, the SPY actually fell by 1%. So here is a weekly chart of the SPY, and you can see after a nice run up, we finally had a red candle. So SPY fell from about 412 at the end of last week to now 408. So the SPY's total return is 6.7 and I'm at 9. So this represents the first week. Here I have a chart you can see where my returns, this blue line, is higher than the SPY or the S&P 500, which is the benchmark that I'm trying to beat. And it took me 6 weeks, but I'm finally seeing my efforts pay off. Now it's still early in the year. We have all the way till the end of this year, 2023, to see where this goes. Okay, so Monday, Tuesday, pretty standard. And then on Wednesday, it was some call options that I sold that made a big difference. So I'll show you that. On Thursday, I lost a bit of money. I thought the market was going to reverse directions, but it didn't. And then on Friday, pretty typical. So altogether, that's 1177. And of course, if you follow me on Twitter, you'll get all the updates on a daily basis, or sometimes I even tweet in the middle of the day. If I notice a pattern going into the next day, I will usually call it out. So for example, on Monday here, after making $98, for Tuesday morning, I'm going to be bullish because the price of SPY bounced off the green line, the 9 EMA, and also the MACD is continuing to go up. And then on Tuesday, the next day, which is this area over here, you can see it did go up. And then at the end of the day, I mentioned there's a green bar that closed above the top of this triangle. So I'm going to hold some call options for the next day. And then the next day come, that was over here. Unfortunately, the market did not go up. So as soon as I saw the market fall below all of these moving averages, the 9, 21, and 50, I got out of my call options and I went short. So here are my Wednesday trades. You can see right early in the morning, I sold the call option that I was holding for a nice profit. And I also sold some bear calls over here because I was anticipating the market to continue to fall. And that was a pretty good day, mostly because of selling that call option early in the morning instead of holding it, because otherwise it would have gone down in price. As you can see, all day SPY just kept falling. And then because at the end of the day, SPY closed below the upwards trend line, I was bearish. And I'm talking about this upward sloping bullish trend line over here. Because the price is now below this line, I said tomorrow, which this would be Thursday, I am expecting prices to go down. And Thursday, that is what happened. All day, SPY started over here and ended the day at 407. And then finally on Thursday, I said I'm bullish going into Friday. So I was expecting SPY to go up, and it did. This was Friday, pretty much just followed this line going upwards. Okay, so let's go over some of today's trades. I posted this in the morning around 10:15 local time, and I basically drawn this wedge here, and I just said, it's broken out of the top of this top wedge, and it's even back tested, and it looks like it's going higher. So at this point, I said, I'm going to sell puts that are expiring today to take advantage of the market going higher and time decay. If you think the market is going up, you can either sell puts like I'm doing, or you can buy calls. The problem with buying calls is if the market doesn't really move up too much and just kind of goes flat or moves up a little bit, then you could lose money due to time decay. But if you're selling puts, then time decay is actually your friend. So looking at my interactive broker account here, we can just take a look at some of the trades I made today. It's a little bit confusing because I have SPX over here as well, but SPY is what we're looking at for this challenge. Here you can see I'm selling puts over here. This is at 405 expiring today. I also sold this spread over here, collected 13 cents for 3 contracts. And what happened for the rest of the day? Well, it continued to go up, went back down. As long as it doesn't go back below the top of this wedge, I don't have to close my position. So it went down, retested, basically bounced off of the bottom of this wedge going up here and continued to go up. So pretty much all of the options for SPY expired out of the money. You can see for all of the February 10th expiration, which is today, the unrealized profit here, which all ended today, are all positive. So these are all going to turn from unrealized profit and loss to realized after today because they all expired out of the money. Ideally, what I wanted was for SPY to finish somewhere between 406 and 410, and it looks like SPY finished the day at 408, so right in between there. So it's nice to see everything expired here. I did not have to close any positions today because like I mentioned on Twitter, it was a pretty predictable wedge pattern over here. Yeah, as soon as I saw this playing out during the middle of the day, I sold some bear calls when it reached the top and got rejected. And then I sold put spreads for a credit when it got to this line and got rejected. So it basically just bounced around in here, and I was able to capture a lot of theta decay by just selling puts and selling calls. So that's basically what happened here, bear calls and bull puts. So these were all the options I traded today for $221 in premiums, and then subtracting $21 for commission, that's $200, which I've written down here. So part of that $200 gain is selling options going into next week. As you can see here, I have a SPY bear call expiring on, this is Monday, February 13th, and another one on the 15th, Wednesday, and then finally one on Friday, next Friday, February 17th. So on Monday, I have this bear call expiring at 415, 416. Since there is previous resistance up here, I don't expect the stock to have enough momentum to go all the way past 415. So by Monday's close, this February 13th bear call should expire out of the money. Now I have another spread over here, a bull put. This one expires on Wednesday, 406. Down here, 406 short put. And this one I'm probably just going to close on Monday. The reason I sold this was because the premium was pretty nice, a $73 premium for selling a 406, 404 credit spread today. Now, I'm not going to wait until Wednesday to close it because on Tuesday of next week, we're going to get the CPI report. So that's going to come in early morning before market opens. And if there's a negative surprise, then the stock market could go down a lot more than 406. So Monday, I'm projecting the market will go up. So my bull put spread over here should be worth less than 73 cents. And I'm going to buy that back for a profit, hopefully. And then finally, I have this 385 put expiring next Friday. This one, I'm probably just going to leave it until it expires. And even if the stock market goes down to 385 or lower, I'm okay just buying 100 shares of the SPY, because then I can use that to sell covered calls on and basically use the wheel strategy for the SPY. It'll be part of this overall option strategy, but owning 100 shares at 385 is not a bad price to pay. February 17th, 385. You can see the delta is at just negative 5%. So that is a 95% chance it will not reach that low. So that's what I'm thinking going into next week. Monday, probably up, but for the rest of the week, I'm going to guess down just because on the daily chart, we have a rollover of the MACD. And in previous cases, that usually signals a drop. So just a word of caution. After CPI comes out, you're probably going to see the SPY pre-market move very aggressively in one direction or the other. I would hold off until at least through the middle of the day before making any trades, because days when inflation data comes out, it can be very tricky to trade. Yeah, so this line is going to be super important. After CPI, if you notice the market going through here, then we're probably going to go lower for the next couple of weeks. However, if there's a bounce, then most likely we are headed higher by the end of the week. So that's it for this week. Thanks a lot for watching. Good luck with your investments, and until next time.